Hi, this is Dustin with Dustin's Dollars. Today, I'm going to be talking about Oklo, a nuclear energy or nuclear power startup. I'm going to be going through some of the highlights from their investor presentation. I'm going to talk a little about the current state of the company financially, and then I have my own sort of growth model that I will walk through and give my thoughts on how I could see the company growing and what it might look like, between now and let's say, when they start to actually have some operations going and what that could mean for, the stock if you're looking at the company right now. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I do not hold any position in Oklo. It is interesting. At the right price, I might purchase. There's a bit of foreshadowing here. But this video should be for your entertainment purposes only, because I can be wrong about everything I say in this video. You need to do your own research before making any investment decisions. All right, so as I mentioned, we are going to be talking about Oklo today. This is a nuclear power startup. This is, sort of the concept of what they think their powerhouses, I think they call them, might look like. And by the way, before I get into it, let me say thank you to Henry LE6307 for requesting me to look at this company. It's an interesting company. So that, I assume he asked, hey, what do you think about Oklo? I don't know anything. So I did my research, at least, some preliminary research, and now I'm giving you kind of what I found. So thank you, Henry, for this topic. All right. So Oklo, let me pull up my notes here. Apologies. They are a nuclear reactor company. They really want to sell power, and they want to generate through nuclear. These are now the what are they called? The more modern reactors. Sorry, the name SMRs. The actual words are escaping right now. I guess they're modular reactors. That small modular reactors. I think these are, I believe, the generation 4 nuclear, I think, is my understanding. And so this is not quite the same as the nuclear from 50 years ago. These are smaller and, safer. In particular, one thing that they've highlighted a number of times, if you've looked through the materials, is they say this has its own passive sort of inherent cooling and safety system. Things are not under nearly the amount of pressure that some of the older nuclear systems are. And so that's a big plus for these things, that they think they're just much safer, and that might really, really help gain adoption and have people be much more comfortable having these deployed all over the place. And they had some headlines here. You can see that nuclear has actually been gaining some popularity and momentum recently. There's some governmental headlines here where they list it out. And I mean, it really just makes sense. Here's a recent act. The Advance Act is what it was called. I think that was an acronym. And this is changed some of the rules and gave a little bit more directive to the NRC, the Nuclear Regulatory Commission. I think that's what it is. The actual federal government entity that regulates nuclear and that would be granting licenses and such, to change a little bit how they look at these newer small modular reactors, to treat them a little bit differently, because they are different from some of the older generation of nuclear. And so again, this is just sort of gaining popularity, and it makes sense from what do I want to say, topical perspective. If you look at all the ESG and in particular the green energy stuff, where everybody wanted to reduce carbon emissions, I think nuclear ranks pretty favorably on that, and it doesn't have some of the other drawbacks of other green energy sources, where it could be intermittent, or not constant power output, right? I think nuclear obviously solves all those, and I think the cost is, it's already there with nuclear, if I understand it. Whereas some of the green energy technologies, hey, the cost curve is coming down over time as we develop better and better ways to do this. But I think nuclear is already cheap, and I think there's a slide somewhere in this presentation that does sort of say, hey, this is where nuclear is at. I guess I could probably go real quick and find that. I know what it looks like. Let me show there. They're measuring the metric is that levelized cost of energy. Where is it at? Did I go past it already? I'll find it. Sorry if this is like going way too fast through these slides. There it is. That's the one. So they do talk about this LCOE, which I believe is the levelized cost of energy, is sort of a way to measure what does it cost to generate electricity in different power generation methods. And you can see here that Oklo's small modular reactor, what they believe is going to be cheaper than, renewables plus the storage, even cheaper than natural gas, which I found interesting. I thought natural gas was actually pretty cheap, especially nowadays, but they think that this is even cheaper. So that's really impressive. All right. Anyways, going back to one of the other things that they mentioned, they say, hey, we have Oklo in particular, we have a lot of regulatory experience. We've worked with this, and they don't really call it out here, but they did submit a prior license and it was denied. I do have the the story up on that real quick. This is the very small reactor, 1.5 megawatts. That they want to put in Idaho. I think they're still trying to do that. At least they're still trying to put one in Idaho. I don't know if this is 1.5 megawatt or if maybe they upped it to the 15 megawatt reactor. I'm really not sure. I haven't looked into all the minute details of this company yet, but they don't really call it out in the presentation. I just want to say that they were actually denied the first time. And, their response, I think it's down here in the article, where they basically said, yeah, this is the first time anybody's really tried to do this. We were the first ones to apply for this license. And yeah, it's right here. Our combined license application was the first ever accepted for an advanced plant. So there's many new things for everybody to learn from. Basically saying, the NRC, this is kind of their first time going through it. It's the first time that any company's gone through it. So, they are spinning this as a positive, let's say, and calling this out as they have some experience going through this process, and they don't have these approvals quite yet, but they think that they are closer. And one of the things I will mention that they have called out further in this slide deck is that they have a number of current employees who were former NRC members, and I don't recall the exact number. I want to say it's 5 or 6 or something, which is significant, right? I mean, that seems like quite a few people to actually, who came over from that governmental entity that can help them craft this exactly in the way that's going to, give the regulatory agency what they're looking for. So interesting. And they talk about some of their timelines here, and they call this as a competitive advantage. I will spend just a moment on this, where they say, hey, here's a typical timeline to do this. It takes 48, 72 months, and then every time you want to deploy a new one, it takes you another 48, 72 months. And I guess there's even another one that takes longer. They have called this out and said, hey, because of what we're doing, this custom combined license, it's going to take 2 to 3 years to actually get the first one. And then every additional deployment that they want to do, they think they're going to be able to get that regulatory time down to 6 months to a year and a half. And they've basically said that's going to let them move fast when they want to really scale up. And I think this is partially because they're kind of productizing their reactors. I guess I could go to this other slide here and say, hey, we're going to have sort of one stock 15 megawatt reactor, a 50 megawatt, and then I think they're, I think it says it down here. It's an early stage design for that 100 megawatt powerhouse, but that's, I think the 15 and the 50 are their initial targets. And so I think that combines with, making those sort of standard sized reactors that they can maybe, scale out. And if somebody wants, I think they've said this, where if somebody wants, 40 megawatts, they'll build 3 of those 15s. Or, if somebody really wants 50, maybe they build 4 of the 15s, to deliver actually 60 and give them one, a redundancy of one. So if they do have issues with one, if they have to take them off, sort of to do maintenance, they could take one down at a time and still have the other 3 providing the necessary power. So that's something interesting that they've mentioned before. Did want to also cover their business model. This is important. I mentioned already, where they are trying to actually just sign power purchase agreements and just sell power directly to customers. And I don't know if it's in this slide deck or in their DSPAC slide deck, but they had, sort of listed out a couple things of like, what do customers want? Customers, they just want to buy power, right? They want it to be green. They want it to be cheap. Those are all things that they want. They don't want to be on the hook or have responsibility for anything else. They just want to buy power. And that's what Oklo's business model is. I don't know if that's standard or not, frankly. I'll just be honest and say I don't know enough about the industry, but that's a thing that they have called out and said that's their business model. And they are just saying that they are meeting customers' desires and expectations with that business model, rather than trying to actually, I'm not sure. I'm not sure what really all the alternatives would be. I could speculate. probably just sound dumb doing that, but this is one thing that Oklo has actually called out and touted as a positive for their company. This is talking about this slide here, talking about how they are going to, once they start deploying these things, how they think they're going to be able to finance them. And in particular, the relevant piece here is how big is that light blue bar on each of these, sort of stacked bar charts to say what percent of the project cost of the CapEx is Oklo going to have to, fund. And this is really relevant because, every time they want to deploy a new reactor or a new powerhouse, let's say, if that costs them, hypothetically, if it costs, $100 million, how much of that can they borrow as debt as part of that project versus how much does Oklo have to actually put forth? And there is one big variable here. Well, there's two variables where they say, first of all, there's a difference between whether it's actually the first one that we've deployed or whether they're kind of building on horizontally at the site. And so that is one thing they call out here. But then there's also and so that's sort of like the left two bars versus the right two bars. But then the other thing here that they call out is there's this variable around, are they able to use tax equity as a part of the financing process? Now, I wasn't familiar with this. I did a little bit of reading to make sure I understood it. And as far as I can understand this so far, there would be potential tax credits or tax incentives that folks could get with this, generating green power over time. And maybe that's, carbon offsets or whatever. It's not really specified here. But the point is that there are some of these tax benefits that would come along with this plant operating. And they said, hey, we could actually sell the rights to those tax credits or those tax incentives off to someone else up front when we were financing the project. And so they would pay us for those rights. And so once it starts operating, Oklo and their customers would not actually get the benefit of those, tax credits or tax deductions, whatever they are, but that whoever it was that bought those rights from Oklo originally when they were financing the project, they would get all those tax credits year after year after year as the plant is operating. But in return, Oklo gets the money up front that they can use to finance this project. And so, the investor gets their ROI because they sort of get the money year after year after year from those tax credits from this plant operating. And Oklo gets the benefit because, they're going to need a lot of capital to actually build these powerhouses. And so that's where you see these gray bars that come in on a couple of these sort of illustrative models where you say, hey, instead of us having to put forth 35%, if we can get somebody to put in partial money from this tax equity, we think, we'd have less debt on there and we'll have to put in less money in terms of our own equity. So I think that's actually really important because anything that brings down the equity lets them, once they do want to scale up faster and faster, right? Because it's just less money they have to put in. And the long-term returns might be even better. It's hard to say, I don't really know the specifics on that tax equity as to whether or not the long-term benefits are going to be, better or worse, but at least it helps them scale up faster because they're not so constrained on capital. One thing that, will come into play once they start talking about their growth model here in a couple minutes. Let me also mention they have a good pipeline, as they have called it out, in terms of a number of folks who are interested. They say their pipeline has grown in about a year from July 2023 to August 2024 from about 700 megawatts worth of customers to about 1.4 gigawatts here. And I'm always a little skeptical when companies that are this early and know that they're not going to be deploying anything for, quite a while. I think their earliest deployment might be in 2027. I think they're really starting to scale, they say, in 2030 or so. So, I mean, we're talking, likely 6+ years for these customers who are saying they have, interest in that power. So I'm a little skeptical that this pipeline is particularly firm or what that really means. However, on the flip side, once they are closer to being up and running and being able to scale, it doesn't surprise me that they will have lots and lots of folks lining up to get, nuclear power if they can get in a facility close to them, so the transmission is easy and, the cost is low, it's consistent. I really think that it's makes sense to me, at least, that nuclear is going to be very, very in demand. And if Oklo is, on the cutting edge of that with their technology and all of their, advances they've done to actually make a product and get through the regulatory process, that does bode well for the future of the company. All right. And I did mention timeline. They have this slide here that talks about what is their actual timeline to having operations at scale. And basically they say, look, it's going to take us until 2027 to get just the very first deployment up and running. And that first one I think is at that Idaho facility. And they have some other customers that are trying to actually sign from just, sort of backlog, letters of intent to actual firm power purchase agreements. I don't know, again, what that process looks like with respect to the actual regulation. Maybe those folks won't sign anything binding until Oklo has the actual regulation or the regulatory approvals. That would make sense to me. Again, not an expert on that, and I'm sure it would vary a little bit from customer to customer. But that's a thing just to be aware of, just as you're looking at this company, that even what the company's putting out right now, which they generally have an incentive to be, I think, optimistic with these, in order to help raise money for the company and continue moving along. Even with their time scale, they're saying the initial deployments are not going to be until 2027, and they're not really going to be scaling up until 2031 and on, right? So you're looking for years and years and years before there's significant revenues coming from this company. So that's a bit of a foreshadowing what my growth model is going to have in just a couple of minutes. All right, so moving on real quick, a couple of things I want to mention. I am not going to talk about it in detail at all today. They have an entirely separate vertical that they are trying to get into in terms of sort of nuclear fuel recycling. This is potential upside that the company has that I have not gotten into at all. It's not included in my model. So just be aware of that. If you are interested in the company, definitely do your research on that, because there may be another area that's going to provide value for you as an investor. Let's get to the executive team. And I do have this, I think, in the title, where, this is backed by Sam Altman. I think he was an early investor, I want to say in 2015, I believe, way back when the company was still private. And I think he is currently the chairman of the board of directors. He also, I don't know if I think I mentioned it, but this was a SPAC company. It was Altman C SPAC or whatever, I think was the ALCC, I believe was a ticker. And so they did combine with Oklo. And I think that happened, I want to say I have the article up here. Let me close this. The article up here. Yeah, it was in May 10th of this year. They got $306 million at the time to, continue on and capitalize the company. And again, that was with, in addition to being an early investor directly in Oklo, Sam Altman also is one of his SPACs that did the combination with that closed in May of this year. So he's pretty well involved in the company, has a lot, he's got a significant stake in the company. For him in particular, maybe it's a small portion of his overall money. I think Sam Altman is a billionaire elsewhere, so it's obviously not, maybe it's a small portion, but I think it's also strategically important for him. You just look at it. Sam Altman has OpenAI. They need power for their data centers, and it's pretty good combination to have a nuclear energy company that can deploy a couple reactors to supply consistent power to these data centers. So I think that makes a lot of sense. I won't say anything more on that, since I do sort of work in the data center space myself, and I don't want to have any conflicts of interest here. But I don't think anything I said there is, none of that is private knowledge or even rocket science. Not pretty easy to connect the dots yourself there. I'll also mention the co-founder and CEO, Jacob DeWitt. I've listened to a fair bit of him. He seems pretty bright, a little salesy, I will mention, but he also has a PhD in I think it's nuclear engineering from MIT. And then you have the co-founder, Caroline Cochran. She has a master's in nuclear engineering from MIT. So they have some pretty significant background in nuclear stuff. I will also mention, this may be a positive or negative for you. As an investor, maybe you don't care. I believe that the CEO and the COO here, the co-founders, they are married. So I could just imagine that makes sort of an awkward dynamic with certain things. But, hey, they're both MIT materials. So, I mean, regardless of some of the other things you might, think that the marriage aspect brings in, they're very likely both incredibly competent and bright individuals. So, I mean, that's definitely positive regardless here. I think on the very next slide it does have, it says it right down there in the bottom right where they say they have 6 former NRC staff members that are now working at the company to assist with their next application filing. So I think that I alluded to that already, but that's just something to be aware of, that it provides them a potential advantage that other competitors in the space may not have. How many of them are going to have a number of, former NRC staff members that can actually help them navigate this regulatory process. So one positive for the company there. And, since they were a SPAC, you do need to worry about how are these shares, locked up. And because they were recent de-SPAC, in fact, in May, this is sort of the structure. There are 122 million, roughly 122 million total shares outstanding. And there are 41 million of those are under this sort of phase 3-year lockup, right? And so this is basically from the co-founders and from Sam Altman, I think one or two other of the big holders, again totaling up to 41 million shares, so about a third of the company. I guess 33.9% there. They made the math. They already did it for me. And there's a sort of phased approach where 40% will unlock at 1 year, another 30% will unlock after 2 years, and the last 30% will unlock after 3 years. So they're not just going to dump all these shares on the market immediately, as you've seen with maybe some other SPACs, or maybe with much shorter lockup periods. However, there is a clause here where for each one of those sort of tranches of stock, if the share price trades above a certain level, which it's $12 for the first tranche, for at least 20 of 60 trading days, within 60 days, if at least 20 of those days, it's probably closes above $12. It's probably not trades for any second, but it probably closes above $12. Then those will sort of accelerate, and they will be unlocked after the 20th day of that happening. So, if the stock goes up to $16 tomorrow and stays that way for 20 trading days, the rest of this lockup is over, right? I mean, the lockup doesn't matter at that point, because the shares they've met their accelerated unlock criteria. I guess it's not vesting, but accelerated unlock criteria, right? Where now all the shares could actually be sold, could be dumped on the market. And so that's a lot of shares. They do have in there, if you dig in, and I've read a lot of the filings here. If you dig in, this is their Form 424B3 that was filed, I think, in September. They list out how many shares there are by a whole bunch of these other folks, and I think it's mostly these large holders here are the ones that are locked up. Those plus, I want to say, Hydrazine Capital. I'm not sure if Michael Klein is locked up or not. He is, I think, on the board. I think was part of the Sam Altman SPAC. But if you add those all up, I think it actually ends up being more than the shares that they said were locked. So I think Michael Klein might not be locked up. Anyways, what I was getting at here is you can see, if the stock is at even $10 or even at $5, most of these folks have made a ton of money, right? And in fact, there's another table. I think I missed it. Where's it at? Because this one up here shows their actual cost basis for their shares. Let me search and find. This will only take a moment. By the way, side note, Mithril 2 LP, that would be a Peter Thiel SPAC, I'm pretty sure. Sorry, Peter Thiel fund. So Peter Thiel is also, an investor in this company, which I thought was interesting. I didn't know that until I started diving into this, but there you have it, Sam Altman and Peter Thiel. Now, Peter Thiel is split across so many different things. I'm not sure that it, really makes a difference, but it's interesting that he does have some back into this company. Now, this is what I was getting at. You can also see here, if you can see that column on the right, the potential profit based on the current trading price. And I believe when this was put together, the stock was trading at like $6 and change. So even if the stock is only at $6, right? And today it's trading, I think, at $11 or so. If they get this accelerated vesting, it will be at $12 or $14 or $16 at least. But even if the stock is only at $6, these folks have a ton of money. This is their profit from their cost basis, and so they put it out here where they say, hey, basically the co-founders, Jacob and Caroline, They each have about $80 million. Sam Altman's, his SPAC fund here, or sponsor fund, whatever you want to call it. I'm not sure the precise term. $70 million. Peter Thiel's fund has, $12.6 million. Then it goes on here, right? Even just some of these other folks that I think are, family members of the co-founders. I don't know if these are their children or, I'm not quite sure. I didn't do the research to dig that deep, but I mean, even these folks who they just gave some money to, or maybe these folks bought some early on in the company, they've got a couple $1 million they're sitting on here. And so it's not unrealistic to think that once these get unlocked, these folks are going to take some profits off the table, because, that's a lot of money. Maybe these folks are already wealthy and it's not significant to them, but I have to imagine that it's pretty significant money to most people. So just something to be aware of, right? And I spent a fair bit of time on this ownership because, these folks can actually dump shares in the market, and that can have a pretty nasty impact both for you as the investor, and then, with a company like this that is not going to have revenues and not going to have cash flows for, many years, that can put the company in a pretty nasty state, because if the stock price is depressed, that sort of, ties their hands or really, really limits them of how much can they raise through dilution in order to help fund the company, in order to help fund, the growth of being able to build these, be able to build those actual nuclear reactors, because those are going to take a fair bit of money. All right, so that was mostly what I wanted to go through for the holders. There's one more note here on the investor presentation. This talks about their actual cash burn, and they say, in year to date through to Q2, they burned $17 million, and they expect to burn 35 to 45 for the year. Sorry, give me one moment. Now, one thing that is not made particularly clear here, although I believe it is the case from reading through their 10Q, is that I believe that 17 million is how much they've burned. It is year to date, except you have to remember that this company was actually just the SPAC company all the way up until May 10th. And so in terms of the operations of Oklo, I believe this is really it's capturing the SPAC all the way up until May 10th, which probably has very, very, very minimal cash burn, practically none. It's a SPAC. It just sits there with the money until they get a deal done. And then, from May 10th to June 30th, which is roughly a month and a half, half of a quarter, basically, of the actual operations of Oklo, right? So I'm not quite sure that this math works out. If Oklo burned $17 million in about a half a quarter, that they think they're only going to burn another 35 to 45 by the end of the year. So we'll see when Q3 comes out, which should happen in, about another month or so. When the Q3 results come out, I will be very, very interested to see what does their Q3 cash burn look like. Because things could have also been off. It's unclear exactly what they mean here by the cash burn, though. Again, that's my interpretation. I believe that's the way it is reported. So I think they're, accurate in saying that it was, the SPAC up until May 10th, and then the actual operations of Oklo from May 10th until June 30th. But what I'm curious about is, Q3, when they don't have the SPAC transaction going on, it's just sort of a normal, quote unquote, quarter for them, for Oklo. Post SPAC, everything's just the normal operations. How much cash are they burning? And that will make a pretty significant impact in terms of, if you look forward, how much cash are they going to be burning for the next 3 or 4 years before they get significant revenues coming in. For now, I have been, to some degree, a bit, you could call me pessimistic, because I'm not even necessarily looking at their, outlook for the year. But I think, I've been annualizing that $17 million burn as if that was a half of a quarter, right? So I look at this as, where's my calculator at? Oh, it's only got the window. Sorry, you can't see my calculator. But I mean, if you brought it up, I will just tell you what the math is. You just take the $17 million that they burned, multiply by 8, because that represents roughly a half of a quarter. And that annualizes out, just round that off to about $140 million of cash burn for the year, right? And so I think in a full year, right? So that's what we might expect to see in 2025. And that's what I've used in my model because I'm trying to be realistic here. You want to look at these companies, they're trying to present things in the best possible way, and I would generally believe, the actual numbers over the guidance if the actual numbers are pointing in a more negative direction than what the guidance is, and they don't have a really good story as to why that's, why the discrepancy is there. So all that being said, let me get to the growth model that I do have here. Actually, first, I'm going to take a tiny brief detour and so that you can understand the current position of the company from a financial standpoint. Now, this is their balance sheet at the end of Q2, and you can see they have roughly $235 million of, basically cash, right? They have $105 million of actual cash and then $130 million of marketable securities, which I'm just counting basically as cash. And of course, they're collecting some interest on that, but interest rates are dropping and they're burning this cash on pretty quickly. So I'm not particularly worried about, or I don't care that much about what interest they're making. I'm just calling this $235 million of cash. It's close enough. And then here's where I'm looking down here to say what were their operations, right? And they actually burned $17 million. That's actually their operating expenses. Some of that was stock-based compensation, but it come down to their cash flows, and you can see net cash used in operating activities, right? Net out all the stock-based compensation stuff. They did actually burn $17 million in the quarter. So again, I already talked about it. We'll see what the Q3 numbers look like, but for now, I'm annualizing that out as if it was a half of a quarter and calling it $140 million burn rate for the year. All right, so this gets to my growth model, and I split this up, started at 2024, and I went all the way out to 2033. And again, that's going back to their rough timeline that they had for when are we going to sort of have this initial incubator period where we're trying to get through regulatory approvals, sign some customers, get some financing lined up, and then deploy their initial few reactors between 2027 and 2030, and then start to scale up from 2031 onwards. And so this actually has them starting to scale up in 2030. So maybe I'm even a bit optimistic, but that's sort of roughly matching that timeline. So I think this is about as optimistic as you could get from that perspective. Have them, just go through here real quick. This line here, row number 3 is their operating megawatts. And so I go and I say, hey, if they get their first 15 deployed and operating in 2028, going to 75 and 220 by the end of 2030, and then scaling up to 470, 770, and then 1120, almost that full backlog, or not backlog, pipeline that they said that they have. If they actually got through most of that and had it deployed and operating in 2033, that's what my model has here. And again, this is I think about as optimistic as you can get. And I'm trying to do this to get a valuation for the company in terms of if things go well, things go on plan, this is kind of what their plan is. And I think that's not, so unrealistic to think about because nuclear kind of checks a bunch of boxes for lots of people. It's gaining momentum. So there is a distinct possibility, if Oklo is the real deal and their technology works and they have, pretty good team members they can execute, they could actually ramp up on that timeline and, they just have a lot of, tailwinds at their back that can make this happen. But again, I think this is a fairly optimistic, schedule for this to happen. So that's the context for this entire model. Now, even if they do that, which I think would be a phenomenal outcome for the company, we have to go through what do the numbers look like. And that's what this actually is trying to do. We have their, I mentioned I have this split up into a couple different sections. One is for their operations, right? How much do they have in terms of operating nuclear power? How much revenue does that bring in? How much cash flows do they get off of that revenue? And then what's their overhead expenses, right? And that's their, you can see they have that current overhead right up here. That's their operating expenses, right? They're not operating any nuclear power. They have R&D, they have G&A. That's what I'm counting as their sort of overhead cash expenses right now. And then, you do the math on that and you say, well, okay, what's their actual cash flow from operations? And so that's what this line is here. And you can see in my model, they're basically negative all the way up until 2031. And then they start to turn positive and start to turn very positive by, 2033 in this type of model. Then I also modeled out what is their expansion. And this is basically, how many new megawatts of power do they build per year? And this is mostly done because I want to know how much capex are they putting, how much money are they putting down for their capex on these projects. And I put in a line item for, what percent of the cost of each plant is, do they have to actually put down? And I guess I could go and say where I got these numbers from and where I got the revenue numbers from, the cash flow numbers in their, excuse me, I need another drink here. In their presentation when they were still SPAC and they were, proposing this was a merger, business combination, whatever you want to call it. They have this slide here, which I found very, very useful. And this is their, hopeful unit economics on these plants. And this is the left side here. Forget about the right side, but the left side here really lists it out where they say both for a 15 megawatt reactor and for a 50 megawatt reactor or powerhouse or whatever you want to call it, this is what we'd have to pay. This is the cost of the plant, right? It is this row here. And this is combined with both the initial fuel cost and the actual cost of the plant. And then based on that, total cost, like for example, for the first of a kind 15 megawatt reactor or powerhouse, it's $69 million. And then off of that, they believe they can get annual revenue of, $13 million. Their expenses are $5 million. And so then you get cash flows of $8 million per year. And again, those economics do even look a little bit better when they're deploying additional units at a site. And so I kind of took an average of all of these numbers here because I really have no idea what the mix of all these is going to be. So I just took the averages and divided by megawatts, obviously, because, it has to be normalized per megawatt. And so I took that and kind of came up with numbers that were, if I want to go through this real quick. I don't know where I have it there. I could actually just look at my spreadsheet. For the actual revenue, I figured it was, what's that? $750,000 per megawatt in revenue and $580,000 per year in cash flows per operating megawatt. And then for the actual project cost, that comes out to $3.4 million per new megawatt that you're building. And then in this model, I also have them being able to build it. Hey, Henry, thanks for hopping on the stream. Hopefully if you were able to see it from the beginning. If not, feel free to always, rewind and watch from the beginning. That's why I do these on YouTube. It saves them for me, which is nice. But looking at, the CapEx here, I also got that number sort of average again per megawatt cost of about $3.4 million per megawatt. And in my model here, I have them spending it in the year that I have them, building it, and then for it to be operational the following year, right? So you can see here, if they spend the $51 million in 2027, they still have 0 operating, megawatts. And then that comes online in 2028. And in 2028, they have 15 megawatts operating. And again, this may be too optimistic. Maybe they can't build them that fast, in which case, reality would look worse than this. Once again, I'm trying to come up with what I think would be a fairly realistic / optimistic model so that we can sort of look at when might it start to make sense to look at this company, right? What's the sort of the highest price that I would want to pay or that I think is a fair value for the company? And again, there's always risks. It can always be worse, right? I will throw that out, just for anybody who's gone this far and is looking at this model. Just as a quick side note, these sorts of companies, I'm going to give you a fairly optimistic picture of things. This is if things go right? There are so many risks when there's a startup company. It's ridiculous, and you have, existential risk for the company because if things don't work out, they don't have any cash flows coming in. They're going to have, at that point, things get really bad for these companies, right? So what I'm going to present today is, sort of the most realistic picture. Anyways, let me keep going. And then I also modeled out what does their dilution look like, right? So if they actually have, sort of negative cash flows for a number of years, and they have some CapEx because they're actually building out these projects, they have to raise money somehow. And I assume in this model, it's all just going to be through dilution. And I looked at, basically how much cash are they going to raise in that year? And I have, that's what this row here is. And I assume they're going to raise in, every year, 2025, 2026, 2027. Initially, they're going to have to raise just to fund the company. They say they're well capitalized, but then, if they're really spending $17 million per half a quarter, that annualizes to $140 million per quarter for the R&D, the G&A, and that's what I have here as their overhead cash expense. I just kept that flat throughout the entire lifetime of the company, which, again, I would expect that maybe to go up. Maybe they can keep it flat. I don't know. But that's what my model has right now. And then I looked at, so because of that, they have to raise money basically every year to keep their cash balance above zero. They also are going to have some stock-based compensation, which is going to, dilute shareholders. Then I also looked at what's the share price going to be, right? What price are they actually diluting at when they need to raise this cash? And I just use an average here of $10 per share throughout the whole lifetime, which is probably unrealistic. This is going to go up, go down all over the place. Hopefully, once they actually sign some agreements and they start to actually have deployments, the stock price is going to go up. The impact of the dilution will be even lower. But for now, I think it's trading around $10. It has traded around $10. I think that's going to be a bit of a it's at least a realistic stock price that I think could be sustained over time, even in the face of some dilution. So that's sort of my take on this. Again, it's super hard to forecast this. Nobody really knows, but using these numbers, I have to put in something here. Then I can calculate that out and say, okay, well, how many shares do they have to issue that year to raise all that money? But this is the shares issued for dilution, but then the final shares outstanding also adds in the stock-based compensation, and that's how you get to these numbers down here. And I have the shares outstanding, just so we go through this real quick. It's currently $122 million. I think by the time 2033 rolls around, and by the time they're starting to really scale up, they could have about 4 times as many shares outstanding. I have my current model, it's 562 million shares. Now again, that's 562 million shares outstanding in another 8 years, 9 years, and at that point they've got a bunch of capacity online, and so I mean, it's not the worst thing in the world, right? If they're executing and they're putting that they're raising the money at a decent share price and it's going to good use, that's what you want companies to do, right? You want them to be good stewards of capital. If they can raise at a decent price and then make an ROI on that money, that's not necessarily a bad thing, right? So dilution isn't always bad. As what are they doing with the money? At what price do they have to dilute? Those are relevant questions. I think the bottom line is they're going to have to dilute, and that's why I'm spending a bit of time on this, is just to understand, for folks to understand, I think it's very realistic that by the time they are scaled up, by the time they have significant operations, there could be 4x as many shares outstanding. It could be 2x, it could be 10x, depending on how things go for the company between now and 2033. But my model here has it at 562 million shares outstanding by the end of 2033. Then from all of that, I look at what is their final cash position every year, and this is basically just to make sure that they stay above zero. I kind of just put in some arbitrary numbers for how much do they raise each year that are roughly round numbers that keep them some money in the bank, not going all the way down to zero. But also not just raising cash for the heck of it, right? They are going to hopefully be good stewards of capital and dilute to the extent that they have to, but no more. All right, so talking all the way through, again, this model has them building plants starting in 2027. They pay for their first in 2027, have it deployed in 2028. There's just one 15 megawatt reactor. Figured in 2028, maybe they deploy a couple more. Maybe in 2029, they start to scale up. They actually build a couple of those 50s, a couple more 15s, and then it scales up more and more. Again, as I mentioned, by 2033, they could have 1.1 gigawatts in operation. And just for this particular model, because I wanted the numbers to sort of make sense, I looked at hypothetically, and again, this isn't realistic, but hypothetically, what would 2033 look like if they did not have that capex of building even more plants? Of course, I'm sure at that point, they're going to be building more and more and more, but if they didn't, what would it look like? Just so we can get a picture of what might their free cash flow look like at that point, and how many shares outstanding might they have. And so That's where I come down here to the actual conclusion for the model. And sorry for taking all that time, but I think it's important to understand all the assumptions that go into this, not just sort of the end result, because there's so many things that you might say, that's too optimistic, that's too pessimistic. Really you need to dive deep on these companies and form your own opinions before you can have a sort of a meaningful, conviction in the stock. But anyways, 2033 numbers. What this looks like is, as I mentioned, 562 million shares outstanding at the end of 2033, about $500 million, 510 million in cash flows for the year. And then, so if I also want to do sort of a rough valuation for the company, I also need, I'm doing a valuation for what might it be in 2033 from sort of a intrinsic value, or not necessarily intrinsic value, but sort of a rough valuation based off of price to free cash flow. And then, what would it look like if we discounted it back to today? For that discount rate, I use 15%. I think for a company like this, that might even be conservative. I think maybe you'd want a 20%. But even if I use 15%, meaning I want to have a 15% return on my money between here and there on the fair value. Now you have to ask, what might investors value this company at in 2033 based on that free cash flow? And, I put a range here between 15 and 100 because I think those are realistic numbers that folks could be valuing this at, right? If there are still tailwinds behind it, if nuclear is really expanding, they have a major, if their pipeline goes from, 1.4 gigawatts to, 14 gigawatts, right, where they're going to be really expanding like crazy, and their technology has been proven to work because they've got a couple sites have been operating for, 2, 3, 4 years by that point, with no incidents. They've proved the actual economics out, and they say, yes, we are actually able to get, you look at these things like, what's that, 70%, 60%, cash flow margins on our revenue. We are able to keep these plant costs down. If all that happens, it's not unrealistic to me that this stock is going to be bid up like crazy, that they are going to get some of these higher price to free cash flow multiples, 75 or 100. Even it could even be more, but at that point, it's a pretty big stock, at that point. Anyways, conclusions here. Stock price in 2033 based on those could be within this range of 13 all the way up to $90. Now, if we look at those numbers, if we use a 15% discount rate and discount them back to today, that gives you a fair value on the stock today of somewhere between $4 and $26, which again is not really useful for most folks for actual trading, right? You say, well, that's a humongous range between $4 and $26. And I mean, I think that accurately reflects the fact that there is tons and tons and tons of uncertainties with this stock. However, a couple conclusions that I have. Personally, I like to be on the more conservative side for these companies that are so early in their process. They don't even have regulations. And again, I've been burned by a couple of companies in the past. You've followed me. Maybe you have an inkling of what one or two of those might be. But for me personally, I am very interested in this space. Nuclear definitely has its tailwinds. But there's also a lot of competition. I'm not going to have time to go through that today. You can do your own research on that one. But there's definitely competition out there in the space of nuclear. So that's one thing that would make me think, this model, I believe, is, as I mentioned, more on the sort of the optimistic side, right? If everything goes right for this company, what might it look like? And based on that, I think I'd want to be a little bit more on the conservative side here based on, what future price to free cash flow multiples we might see. And so I'm looking at this in terms of how I might look to get into the company. Again, as I mentioned up front, I do not have any current position. It is interesting. I definitely see the momentum and the when I say momentum, I don't mean literally just the stock. I mean the fact that nuclear itself is gaining momentum, that Oklo appears to be pretty close on the cutting edge of this. And in terms of being publicly tradable, you don't have a whole lot of options here. So if you want some exposure to it, I think Oklo is a pretty good one. But for me, it gets down to, how might I be interested in dollar cost averaging into the stock? Over time, I'm not gonna go out and necessarily buy today when it's trading at about $11. I'm gonna look closer down here, if it would drop down to the $6, and especially if it gets lower, $4 or $5 range, I would get pretty interested at that point. If it were to drop down to $4, I would probably buy put a pretty significant amount of, my disposable cash that I invest into this company. Depends on the other opportunities at the time, but I think that's probably what I'm going to try to do. Again, if you're interested in the company and you're very bullish and you think, nuclear is going to do really well, maybe if you think Oklo in particular has some competitive advantages, you might want to look more towards sort of these numbers here to think those are fair values for the company. And again, if you think if you are very bullish and you think that this management team is going to be able to get it done, even $11 you might say is a fair value to pay for today. And again, if you get that, you might be looking at stock prices that are 45 up to 70, maybe even $90 in 2033, depending on how much our investors bidding this up, how many tailwinds did they have, for the company at that time. All right, what do you think of the competitors and the barriers to entry? So I think all right, so I haven't done enough research on the competitors to give you a sort of full opinion on that one, but I will say they are definitely, this is a space where it's growing. There's growing interest from a lot of folks. I know that the Bill Gates backed company, I think I have it in my notes here, TerraPower, right? That's one that I haven't done any research on them. That would be one that I would be really worried that you have, companies that are more well capitalized and, that are going to be significant competitors. I don't know enough about the small modular reactors, right? I mean, Oklo is looking at 15 and 50s. I think some of the others are looking at larger, 100 or 250 and again, I think the Bill Gates backed one is going for a 500 megawatt SMR. I think you also have Westinghouse, which is still in the space. I think Westinghouse is an old company, but I mean, I think they did nuclear before. I think they have probably put some R&D into this over the years, and they're going to be a significant competitors. How about, sorry, and just real quick, also on the barriers to entry. I mean, the barriers to entry are going to be just, this is the science of it, right? And this is some cutting edge stuff. I think they're not the only ones that can do this, right? So it's not like there are other markets where it's kind of like a winner take all. This is absolutely not going to be like that. I think there are other companies who can do it, but the barriers to entry are just, there aren't infinite companies, right? If I want to go start one of these companies, I can't do it. I do not have the requisite knowledge. I don't know anybody who does. There aren't that many folks out there. So, that's going to be the barrier to entry, is just that it's, this is hard science, and there's even more hoops to jump through than just the science itself, right? You have to actually go through all the regulatory approvals that, if and when they do get that would be a nice competitive advantage, right? So the barrier to entry here is, go back to that slide deck. Let's see which slide had the actual, regulatory stuff. But I mean, you go back here, and if they can get through this process, right? If they can actually have these, this custom combined license and be able to actually get approvals for their subsequent ones quickly, at least for a little bit, that will be a nice advantage. Now, on the flip side, I will say, if they can do that, sooner or later, other companies are going to copy that, right? They're going to be copy the same approach, right? Not copy their particular reactors or their particular license, but, copy the same approach and be able to get this. I can't imagine that they're going to be the only ones to do that. So that's sort of my initial thoughts on it. But again, like it's hard, right? This is hard. It's similar to, and again, I'm not trying to bring other stocks in, but like, people, I'm invested in Rocket Lab. I've done a couple of videos on that. They're literally launching rockets and designing satellites. Like it's just hard to do. And I think once again, this is just hard to do. And they also have the advantage of being one of the first movers in this, right? There has been recent legislation. I think, they made a big deal about this, that, the NRC is now changing some of their processes and how they look at these licenses based off of that Advance Act. The Advance Act. And that, I think, means that Oklo being around now is a really positive thing, because, whatever the market opportunity is for nuclear, they're going to be able to capture a good bit of it and become an incumbent here, where they're going to, if they're early, of course, there's not necessarily a hard barrier to entry that some other company can't create exactly, or very, basically provide nuclear power very similar to how they do. But what they are going to have is they're going to have a track record, right? And that's, again, not to bring another company, but Rocket Lab is one that I'm invested in. I've talked about a lot. And they have sort of this Electron launch vehicle that they've launched, 52 times, and it was successful, 50 out of the 52 times. And, there are other companies trying to launch rockets, and, when they've designed their new rocket, hey, we did one test flight, it worked, and they're trying to get somebody to sign with them to say, hey, launch on our rocket. If a company's looking at this, they got two options. They say, well, if the price was similar, if you either got the one that's, they did test launch once, or maybe they've successfully launched once or twice, or I've got, the Rocket Lab's Electron that has launched, 50 times successfully. They do it, 3 or 4 times a quarter on average. Which one are they going to go with, right? I mean, nuclear, no matter how much we want to say things are safe, like, it's safe if everything is done right. And so I think folks are that track record is going to count for something as time goes on. It's not the end all be all of barriers to entry, but it will actually be a positive in their it will work in their favor. Sorry, I know there was another one. How about becoming an acquisition target? I think with with Sam Altman, between Sam Altman and the co-founders who are married, owning that large of a chunk of the company, it's not impossible. Maybe they want to cash out, but I really don't think so. I mean, you just look at again, I'm going to go back to this, to this and say, how much are they in the black, right? How much profit do these folks make? They don't need to sell the company to be fabulously wealthy, right? I mean, these two folks are the ones that own 20% of the company. Sam Altman don't need the money. He doesn't need the money. Sam Altman wants more nuclear power, and he probably wants control over, preferential, if they get this up and going, that he can access that nuclear power. And that right there is 1/3 of the company. So it's going to be real hard to. Now, again, I will say it doesn't look like they have any super voting privileges. I think there's only just the one Class A common stock, as far as I could tell. So, it's possible that the company could get acquired, and they're going to have to entertain any bids. But it really just seems unlikely they're going to get anything to pass without convincing Sam Altman and the co-founders, because again, that's roughly 34% of the company, and I don't think they're going to need it, right? They're looking at this, if they're positive and they're bullish on their own company, which hopefully they are. They've spent a lot of their time on it. They're both smart people. So as long as this is all legit, they see the opportunity ahead of them. Even if the stock goes up, down, whatever, if they keep getting stock-based compensation, which they will for being the CEO and the COO, even the stock goes down and what they have gets diminished, they're going to just get even larger stock grants in the future in terms of, number of shares. And so they're going to be very well taken care of, whenever the stock actually takes off, if it does, if they're able to execute and deliver on this actual market opportunity. So, and even still, again, this was at like $6 and change per stock price. These folks have $80 million each. They could each go out there, sell, sell a quarter of their stock, and they may very well do that. They'd each, net, $10 million after taxes. That's $20 million, between the two of them because they're married, or, whatever, $10 million each if you want to view it that way. That's a good chunk of money, right? For no matter who you are, that puts you very, very comfortably at a certain lifestyle. Not to mention how much you're getting paid by the company. I just don't, and again, they'd lose control if they sold. I don't think it makes sense to me, given that they still have the co-founders here, and that, Sam Altman is the other sponsor here from the SPAC and owns, a good, 10% of the company, that, he's not, this is not his number one or number two thing that he's thinking about every day. He's got plenty of wealth from other sources. So it just doesn't make sense to me. That's my thought on that. Hey, Train Stacker, thanks for hopping on the stream. Totally agree on barriers to entry. Thank you. And agree on your take on that. Cool. Henry says, I got Rocket Lab too. Can't wait on the Neutron project. Yeah. Rocket Lab is, it's such an interesting opportunity and company. I'm very excited about that one. Frankly, I'd be very excited about Oklo. If the stock drops more, I think it happens, right? And I think that was a big thing with Rocket Lab, where it dropped down for for quite a while. And I mean, I bought all the cash that I had. I was buying shares when it was in the $4 range. Fortunately, this wasn't there for very long, but yeah. Anyways, I don't know if you have any questions or comments more about Oklo. That was basically all the material that I had to go through today, I believe. Let me skim through my notes, but yeah, I think that was it. Hopefully that gave you all the information you were looking for. I mean, again, you can go way deeper on this stuff. I do think the competition will be one place if I was looking to invest in Oklo where I would spend some more time and understand, sort of corroborate, are they really on the cutting edge of this? It does seem like it from the initial places that I looked at. I think there was, a couple other competitors, just a couple of things I had in my notes. As I mentioned, there's that Bill Gates backed company TerraPower that I believe, could be some significant competition. There's also one called New Scale Power. I think that was one that seems to be pretty close in terms of where they're at. I think I even saw some stuff that, they may or may not be the one who's actually expected to be the first SMR licensed in the US. Again, that was New Scale Power, NU Scale, a subsidiary of Fluor Corporation, I believe it was. And so, there is definitely competition out there. And again, Westinghouse is another one where they're a much larger company. And so they're out there. The competitors do exist. But on the flip side, I think the market opportunity for nuclear is humongous, and it's hard to see that any one company is going to just, take all the market share because, I think there's just some fundamental costs, right? If we go back to, I don't even know what the slide is. I took forever looking to try to find it earlier. But this thing that talks about, the levelized cost of energy, it's really hard to see that anybody else is going to be so much lower than Oklo. Maybe they are. Maybe some people have some breakthrough technology and they can get this down, and it's not at $40, it's at, $4, right? If that happens, clearly whatever company that is going to take so much of the market, because they're going to be able to undercut everybody else. But I don't see that coming out of these other companies. They're all probably in the same vicinity. So I think, because of the market opportunity is going to be so large for nuclear, that, Oklo, with where they're at, does seem like they will be a pretty significant player regardless of, what other companies are able to do as well. And I don't know if it was in this deck or not, that talked about kind of like the overall market opportunity that they think it's going to be for nuclear. No, I don't think it's in this one. I'm not going to go flipping through more slides to get to it, but basically, it's just there's potentially a gigantic market for all the power that we're going to need, that people are going to want. Yeah, it's not here. Sorry. I still looked for it. I couldn't find it. All right. Henry says, thanks, man. Very good. Appreciated it. Glad you appreciated it. That was a very long video. I apologize for folks who didn't want to stick around this long, but hopefully that gave you all the information that you might have wanted to have about this company. I will give it just a minute in case there are any other questions or comments since this is live, but if not, I will hop off in just a minute. Just as a reminder, I do these videos, try to do them on Sundays as often as I can. That's sort of the one day a week that I potentially have an opportunity to do streams. I don't always get to do it. I missed last week. I apologize for that. I generally try to do it a little bit earlier in the day, but it moves around. I try to give at least an hour or two's notice on Twitter and on YouTube. You can follow me on Twitter. I'm at Dustin's Dollars if you want to. At the moment, I'm really only posting a couple hours before my streams and nothing else, so you're not going to get a lot of junk from me at the moment. Yeah, but that's really all I have to say. All right, I do not see anything else on the live chat. I really appreciate everybody sticking around and watching the video. Thank you very much, and have a good one.